course, we are joined by Nick Colas of Convergix Group. I always want to say Bank of New York Convergix, but it's just shortened now. It's easier to say it's Convergix Group.
It's very simple, just
it's
one
very
word.
simple. All right, so Nick, you put out reports, if not every day, every other day, that are at least 10 to 12 pages. You always have a lot to say and a unique perspective. Why is it that we can't seem to decouple ourselves from Europe?
The biggest concern, I think, is the market fears that any kind of really serious problem in Europe will very quickly spill over to the financial system here. If it were just the European economy, okay, that's one issue. But the worry remains that the financial systems around the world are so interconnected that you can't just have a problem in one region because it'll spill over so quickly to the rest of the world.
And what does this poor number out of China mean for Europe? I mean, Europe can't succeed on austerity alone, and really they need their exports to China. So if Chinese consumption is down with their own goods, what's it going to mean for Europe?
Yep, that's exactly the right point, because the issue here is Germany is the one remaining pretty bright spot. You saw that with the confidence numbers last week from German industry. Germany is the one bright spot in Europe. Why is it a bright spot? Exports to China. China slows down, Europe goes right along with it because Germany has all that exposure from exports.
Hey, let's take a look at the VIX chart. Of course, VIX, the fear index, the volatility index. Remember, volatility is a key input for setting options prices. Look at this chart right here. The long-term average is at 20. We're getting back to 20. Nick, what's your take on that picture of volatility?
I think this chart really nicely summarizes why this is a really bad time for a crisis. Markets have become very complacent, both in terms of the volatility they experienced in the first quarter.
In other words, we got below 20. We got below the long-term average.
We got below 20, and the historical volatility, this is just perspective, the historical volatility got down to 8 and 9. Markets began to feel like, you know what, we're impervious to the problems in Europe, and you know what, we're not. So now the VIX is telling you, you better start paying attention again. There's a long way to go before markets impute a crisis.
But are people paying enough attention to the VIX? It just seems like we're in this risk-on, risk-off environment. Sarah Quinlan from Q Asset Management said to us, people aren't paying attention to the risks in the market. They're all just flooding into U.S. equities. Does it seem like people aren't paying enough attention to what's happening in Europe and Asia?
Yeah, absolutely. And the issue here is there wasn't really a lot of headlines that were negative. We knew the French elections would go down the way they did. Those weren't a surprise. We had some positive surprises. German economy a little better than expected. But you start to layer on the reality that we have another pending crisis in Europe, and you're absolutely right. People weren't focusing on the VIX, but they will now.
Well,
after you, I like it. Where are you going?
This $430 billion boost, do you think our investors are cognizant of the fact that many countries really have contingency plans on this where you can't actually get the dough for at least a year? Do people realize that this money, this rescue, isn't coming tomorrow?
They understand that, and there's as much skepticism about where the money comes from. Think about this. Japan is one of the donors to this plan. Where's the Japanese economy been the last 20 years? And the fact that they're a donor into the plan makes you wonder, okay, if they're not sick, who really is sick?
Well, does that mean that they are saying they're going to give the money, but they might not actually do it?
I'm saying that what happens is it's a signal that the overall financial system around the world is still very suspect, because even people who are supposedly donors to the solution are themselves problematic.
Hey, talk about donors. We got two Spanish bond auctions coming up tomorrow. Short-term debt. The 10-year in Spain's back to about 5.96%. What should people be thinking tomorrow when they look at those numbers?
I'll tell you, the magic number for Spain has always been 6, as it was for Greece before that. And the concern is that if you get yields on the 10-year above 6 and stay there and then go to 7, that's the area where you have a real warning sign.
So we're back to where we were about a month ago, or worse, 2 months ago. We're still keying off bond auctions in Europe.
Yes, although now they get bigger and bigger. Greece is a very small country. Spain is many times the size of it. And the Spanish economy really is in a tough spot. Unemployment rates north of 24%. Youth unemployment 50%. Housing market not turning.
Now, are you telling people to take money off the table?
I'll tell you, at this point, the way I look at this market is we've had a fair amount of volatility. I wouldn't be surprised to see a little snapback rally over the next couple of days. But I think the market is changing from one, to your point, took all the risk for granted and said we're going to be okay, to one saying, you know what, we're probably not okay.
But who is left to come in here and really buy Europe? I mean, these European banks are sort of filled to the gills as far as Spanish, Italian, even Portuguese paper. Who's left to buy? Are hedge funds really going to come in here if yields are above 6%?
Hard to say, but I'd say the short answer is no. It's hard to believe. Hedge funds will invest based on an edge. What's your edge in buying a European bond north of 6%, aside from waiting for some kind of workout? They come in much later in the process. You saw that with Greece, for example. If
they do they only want short-end paper? I mean, is there an appetite for 10-year Spanish bonds?
It's hard to imagine, isn't it?
Yeah, very hard to imagine. Here's one thing that's not hard to imagine. Facebook coming to market. We're going to give you the detail here. Facebook has applied to list on NASDAQ. This was discussed earlier today, and now it is being confirmed. Facebook has actually made a formal application. The New York Stock Exchange loses out. It looks like it's going to go to the NASDAQ. They also take the opportunity to reiterate a couple of their numbers, specifically the first quarter revenues, $1.06 billion, and that generated earnings of 9 cents. How do you like that, Stephanie?
Muy bien.
You bring in about $1 billion of revenues in order to make 9 cents. I mean, it's unbelievable, isn't it, Nick? The extent to which people are all focused on Facebook.
It really is. And, Facebook's an interesting case study for market confidence in technology, but I think we have to focus on what really matters. I wrote this back at the end of last year. Apple will always matter a lot more than Facebook this year because of the weighting in the S&P, the weighting in the NASDAQ. That's a really large weighting we got to focus on.
A lot of people, by the way, are saying that Microsoft is the new Apple. Right? Because all this, Apple has gone up so high, and now you got to go back to Microsoft, where there actually is growth and is up about, 20% so far this year. Looking better than Apple. Is that possible?
Hard to know because technology's had this very strong bid now from the lows in October. And you've seen technology really outpace almost every other sector aside from maybe financials. And so it's hard to say if we're not just seeing a lot of folks looking at technology, since that's the, quote, hot sector at the moment.
And Facebook also has this tremendous name recognition. Whether you're talking about personal or institutional investors, it's one of those names, it's one of those deals. People feel like, for whatever reason, they should be in it. They know Facebook, they're on Facebook, they should be in that
Facebook.
deal. You know I am.
Nick, you on Facebook?
I am not.
Not. How about Twitter?
Yeah.
Yeah.
Of course you are. You're a business guy. All right.